Energy is a bright
Hey.
spot today. What's being priced in here?
Well, we've seen really a lot of the recent price trends flip on their head. Remember, we came from a very high price in 2022 down to around sub $70 a barrel the second half of last year, and since then we've seen stability in prices, and more importantly, OPEC cuts coupled with those increased geopolitical tensions that you referred to, starting to firm up the outlook for oil. Plus, we have low inventories, and economic activity doesn't seem to be decelerating meaningfully despite the much higher interest rates. So there's really a combination of factors, but things are looking up, and I particularly think the last few days the tensions in the Middle East have really played a role in pushing prices higher.
Right. So the geopolitical tensions are playing out on the supply side. Talk a little bit about the demand side. I was just talking to Amaru on China's economic recovery. At least the data in recent weeks shows that the economy may be picking back up. Is that priced in yet?
I don't think it's very much priced in. I think it's not just China, by the way. We're also seeing a recovery in early cycle indicators, whether it's Asian export growth, but also PMIs and other data points suggest that things are picking up. And also remember, geopolitics are not just impacting the supply side as they normally do, but also they're impacting the demand side. We are now traveling much longer routes around the world, and ships are having to move at faster speeds because now you can't go through the Cape, through Suez or through Panama Canal. So you have to go through the Cape, you have to go to Magellan, and that takes a lot longer. So we're seeing, like I said, much longer routes, which at faster speeds, driving up demand considerably. So now we're thinking consumption growth is going to end up being a lot firmer in 2024.
Do you expect that demand to hold up, especially when we're talking China numbers? Are you seeing them like some of the others that this is an uptick, or do you see it as more of a blip?
No, we think it's more sustained. I think it's more sustained, and obviously one of the challenges that the market will likely face, and will soon come to it, is there's been the expectation of a June rate cut, followed by 2 more cuts into the second half of the year. So I think we're back into this mode, into this battle royale, as we called it before, between oil and money. We see oil prices fighting the Fed once again, and we'll see. I mean, it's been an interesting battle between OPEC and the Fed, between Prince Abdulaziz bin Salman and Chairman Powell.
But we just spoke at the beginning of the show, right? Especially markets are reflecting some skepticism about that rate cut in June. And I think it was Peter Bookvar at the beginning of the show said that that's about 50-50 right now. If we don't get a June rate cut, what does that mean for the price of oil?
I mean, I think coming into a summer, it doesn't mean a whole lot because we still expect it to be a bumper travel season. We think people are going to be driving a lot and also flying a lot. And supply is tight. Now, coming into the end of next year, into the end of the year, into 2025, things start to loosen up a little bit. We do have a fair amount of supply growth coming out of places like Guyana, Brazil, Canada. We also should see maybe not as fast growth in the U.S., but we still see some growth in the U.S., and that hopefully comes to a rescue. There's also some more refining capacity coming online, particularly in Nigeria, and at some point in Mexico. We're going to also see Middle East refining capacity. But remember, there's been lots of issues in the past few months, including attacks on Russian energy infrastructure with Ukrainian drones that have also reduced the availability of diesel and gasoline fuel. So there's a lot of stuff happening simultaneously, but again, we think it's more of kind of a 6-month blip that prices can be firm, not so much into 25 where like I said, there's more supply coming, and eventually the energy transition will lead to an erosion of demand trends as well.